Welcome. You are listening to the Whissel Way podcast. Our goal is to discover what's happening in the real estate industry today and help understand what that means to you as a real estate agent, as a mortgage professional, or just as a general business owner out there. And the thing I really want to talk about on today's show, the news literally just dropped within the last few hours, and that is that the Federal Reserve had their annual meeting, and we're going to talk about what they did. And something's happened that I don't recall happening ever. Now, it may have happened and I just don't remember it, but the government is not typically an organization who says they're going to do something and in a negative manner and then come back and say, well, I know we said we were going to do that, but we're actually not going to do that. The government usually doesn't do that. It's usually the opposite. They say we're going to do a little bit of this and then they do a lot of it. But they said they were going to do a lot of something, and they actually decided we're going to do a little bit of it. It's very different from what we typically see from the government. Rarely do they, go back on their word of what they said they were going to do in our favor. Very frequently. I was on a call with a client today, and it was just, screw our government, screw California, I'm out of here, I'm going to Mexico, right? Because that is the sentiment a lot of times, is that our government is not looking out for us. They're not doing things in our favor. They're doing things in their own. But this is one of those rare occasions where the government's actually come out and said, you know what, I know we said we're doing this, but we're not. So the Fed earlier this year came out and said, we're looking to raise the rates probably 5 times over the next year and a half.
And they kind of project that out, right, Kyle? Because they want to project it so the market can kind of take that in and absorb that. And that has been the projections based on what they thought. But today's news, they're saying, guess what? We don't think we're going to need to raise. We're only going to raise maybe 2 times, you're saying, right? That was the nearest.
Yeah, so in the way that a lot of people, they get very confused about how rates work, because we hear, rates are going up. Now, to be clear, we are talking about when the Fed raises rates, they're not raising mortgage rates. They are raising the federal funds rate. Now, the federal funds rate, while not directly tied to mortgage rates, definitely has an impact on mortgage rates.
Right.
Now, there are times where the federal funds rate goes up and mortgage rates come down and vice versa. But for the most part, as the federal funds rate tends to increase, so do mortgage rates. But Jason, if somebody's listening to the podcast right now, they're unfamiliar with how this works and how the mortgage interest rates have these projections baked into them. Help somebody understand exactly how that works.
All right, I'm going to try my best. So I know we kind of just decided to drop this information, so I'm just going by memory. So if somebody's out there, dotting an I, crossing every T, here's how the Fed funds rate works and how mortgage rates work. So the Fed funds rate really is the banking rate, what the Fed offers to the banks, that interest rate. That has been rising up. And we have seen mortgage rates go up, but mortgage rates are long-term future traders. People are betting on what the economy will be doing in 5, 10, 20, 30 years from now. And based on what current activity is happening, they predict how that's going to impact our future. So it truly is a future trade. And so as Kyle mentioned, sometimes we've seen them raise rates and mortgage rates go down because the future had already predicted they're going to go up, and now they're maybe not going to go up as much. And so we're actually starting to see mortgage rates slide the last few weeks based on everything going on. And I think we will continue to see that. Part of the issue, I believe, why we're going to see rates stay within a certain range is, I remember when 9% was a good mortgage rate. But most people here in the studio, if I called you and said, hey, I got this great deal, 9%, you'd be like, no freaking way, right? No way. Because the governments, including Canada, have all got involved and bought down rates. They've been part of lowering interest rates the best they can. And so we've kind of seen this 3 to 5%, and now that rates are in 5, nobody's even happy at 5, right? And we're seeing buyers start to, hey, I'm not sure I want to buy now because the rates are 5. Now my payment's a couple $100 more than it would have been a year ago if I bought because prices are up. And so I really think we're going to see a long-term rate between 3 and 5%. And the reason I say that is Japan did exactly what we did, but like 10 years earlier, and they got to negative rates. And they won't even see rates 3 to 5. And even when I talked to an 85-year-old lady and I told her rates were 5%, she's about yelling at me. She goes, but you gave my friends 3.25. I go, well, it's because it was 3.25 a year ago, hon. It's changed, right? And so if an 85-year-old lady who used to pay double-digit rates is upset about a 5% rate, of course all my millennials are going to be upset. And I think the government's bought in, right? And I really think we're going to be stuck at that spot. And that's what the future is starting to see. We're starting to see what's called an inverted interest rate curve, where the 10-year yield and the 30-year yield is almost the same as a 1-year and a 2-year yield. And every time that's happened in history, there's a recession that's followed. So the future traders are able to literally predict when it's going to happen. And it looks like people have been saying 2020 for a while that we're going to see a recession, and it might be a little bit earlier. You never know. So that's kind of what I've got with rates and how mortgage rates work.
That was some serious knowledge, dude.
That's just going from memory, too. A few weeks.
A few weeks, yeah.
As all the internet guys. Yeah, doing this nearly 30 years. As you can tell, I am a geek when it comes to mortgages and the Fed and just buying homes. I love doing that. There's nothing better than helping a client buy their first home, and they get their keys and they call you up crying. There's nothing better than helping somebody like Kyle Whissel at 19 years old. Didn't have a house. He now owns over 30 units. He's one of the top agents, not only in San Diego, but across the United States. And it's not because of me, but I've been there to help support him, and to see people, to help people like that, right? That's what's beautiful about the industry I'm in, is it's great. Now, on the other side, we may start seeing some short sales, and sometimes that can be a positive. Hey, let's just get rid of this property now, take a little loss. Let's do it while you can, and, move on so you can just clear that versus getting stuck. Because so many people hold on to things that they should let go. Right. And so there could be some positive stuff happening with that as well. So I love what I do.
I love that. So if you're listening right now, you're a realtor, right? We understand that the federal funds rate went up 1/4 point, but that's what was predicted. So I think if anything, you'll see rates stay relatively level, mortgage rates. If anything, you might actually see the rates come down a little bit more, because going into this meeting, the expectation was the Fed was going to raise rates 3 or 4 times in 2019. Now the Fed has stated they're going to only raise them 2 times. So again, the market bakes in the expectation of what the Fed's going to do. Well, being that the Fed now pulled back their expectation, it's very likely you could see a pullback in rates. So even going into today's meeting, there was already some thought that something like this was going to happen. So rates this morning are the lowest they've been since August. And I think you're very likely going to see a little bit of a pullback over the next few weeks as well, after the news comes out, right, that it happened today, that they pulled back that expectation. So as a realtor, as a mortgage professional, it's our job to, control that narrative, to get this information out to the clients, because what's going to happen right now is your client's going to listen to the news and they're going to hear, oh, the Fed raised rates 1/4 point. And now what's going to trigger in every single one of your clients' heads is that mortgage rates just went up.
Yeah, so if they got quoted 5% last week, they now think it's 5 1/4.
Yes, and so this is where it's important for us as the professional in this scenario to help people understand, help the average home buyer and home seller understand that although the Fed raised rates 1/4 point, there's a very high probability you could actually see mortgage rates pull back. And so that's where it's important to understand that these are not directly correlated with each other. Just because one goes up doesn't mean the other goes up. What matters when an announcement like today comes out is what was the expectation going into that announcement. And being that the expectation was that there was going to be a 1/4 point raise, and not only did that happen, that's what was expected, so that was already factored into things, but the fact they're pulling back on the number of raises in the future is actually a positive. The time where you see rates jump after an announcement like this is where the expectation is the rate's going to go up 1/4, and it actually ends up going up 1/2. That's when you see mortgage rates spike. But given the information that came out today, my prediction is that you will see rates stay the same, if not come down even a little bit lower. You're going to start getting into 6-month lows when it comes to that mortgage rate. So our job, your job, is to go and convey this knowledge to your home buyers and to your home sellers out there, because today is actually a positive thing where the media, the typical media, is going to latch on to this information, and they're going to convince the consumer that this is a negative, that rates are going up and now it's even more expensive to buy a home, when in reality that's not the most likely scenario there. So you need to go out there, you need to control that narrative. You need to understand that the media is all about getting clicks, right, and getting eyeballs and getting ears, right? That is how the media wins. And whether we like it or not, as a typical American or Canadian, we click on more negative stuff than we do positive stuff, right? Like, you're never going to turn on the news and have them spend 5 minutes talking about the fact that nobody died today or that there was no traffic today. That's not going to happen, right? The media reports, oh, there's, accidents all over the place and, a big rig overturned. They're not spending any time on these other things. It's all the time is spent on negativity because that's what sells. So whether it be an announcement like today or an announcement regarding what's happening in the real estate market, in the mortgage market, you have to 100% control that narrative. You need to utilize the tools that you have available to you. So we're obviously here. We have a radio show and a podcast that we're doing. We have the ability to share that narrative via this media. What media can you utilize, right? We've all got social media. So maybe you shoot Yeah, I mean, you guys used to sell telegrams and stuff, Jason. You had pen pals and all this crazy stuff,
cards,
right?
give me a hard time, right?
So you've got to use whatever media you have available to you to get this news out there and get it out there as fast as you can so that when people are hearing what the typical media is reporting, you're helping them understand what's really happening. And if you want to be a professional, if you want to be somebody who's at the top of your game, again, whether it's real estate, whether it's mortgage, whether you run a restaurant, right? You need to be ahead of that news. Like, there was the big scare with the lettuce recently, right? Like, you've got to get out there and control that narrative because when the media latches onto that, they basically make it like, don't eat a salad or you're going to die. Like, that's what the media does. So it's our job as the professional business owner, mortgage, real estate agent, we've got to go out there. We've got to control that narrative. We've got to help people understand what's really happening. And if you want to be at the top of your game, that's the way that you're going to do it. So leverage whatever outlets you have, whatever media you have access to get that message out there today. Control that narrative. I want to thank you guys so much for listening to the podcast today. If you want to stay in touch with us, join our Facebook group where we share tons of tips and tricks on there. The Whissel Way on Facebook. You can go to thewhisselway.com. It's WHISSEL. Thanks so much for listening to the podcast. Make sure to subscribe, rate the show, give us 5 stars if you appreciate the information. We'll talk to you next week.